I've had some interesting conversations regarding this whole 50-year mortgage plan. Personally, my take is I don't think it's a good idea. I've talked to some other very intelligent people who have made their case on why they feel like this could be something that's helpful, but I just want to share my insights. The issue is that I ran the numbers just based off of a 5 to 10 year span, say 30-year fix versus a 50-year loan. Some people are surprised to figure out that over 5 or 10 years, you pay less interest on the 50-year loan than you pay on the 30-year fixed. Sounds good at first. However, because of that lower payment and the schedule and the way that it's set up, you pay down a lot less of your principal balance. So you're building less equity. Over a 10-year period, you'd build roughly $300,000 loan amount. That's roughly about $20,000 less equity that you have in your property. So you may save some interest and it feels better because you have the lower payment, but if you're not building equity, what happens if the price on that property comes down even a little bit? Just the slightest movement and you're underwater. Now, I know that some of the people that I've talked with, long-term investors, other people who think, well, hey, this is great for cash flow. I mean, I get that. If you're holding the property for a long term, maybe you have a play, but I really think that this is something that maybe wasn't thought out enough before it was announced. We've had 40-year mortgages for quite some time now. It's not a very popular product. Not many people use this. So I don't really think the 50-year was going to be something that was going to move that needle. I'd love to hear your thoughts. If you have any questions on it, hit me up. But otherwise, stay away from the 50-year loan.